Hello and thank you for watching the EdwinAdvisor show, where I'm here to answer your most pressing money questions. Well, over the last several weeks I've been receiving pretty much the same question. What's going on in the stock market? Where is it going? What are your thoughts? Well, we've seen an incredible volatility in the stock market over the last couple weeks here. I mean, several weeks ago the Dow Jones was up over 18,000. Today it's close to the end of the trading day here, and the market's up about 350 points. But the Dow's at about 16,300, and it's the day after Labor Day when I'm recording this particular video. Well, there's several things I think going on in the market, but there's two that I'll talk to on this video. One of them is China, and then the second is oil. And I think that those two issues are going to be a short-term problem as well as a long-term problem for the overall stock market. Not just the U.S. stock market, but the global stock market. So number one, we'll start with China. China has seen an incredible boom in their economy over the last many years. Obviously China has been driving the world economy, driving the U.S. stock market as well. Of course, anytime that China has some sort of hiccup, everybody kind of freaks out and the market takes a big dive. Well, what we're seeing in China is slowdown. There's no doubt about it. So this incredible experiment that has been China, where you've got some capitalism blended in with communism, which we know in the short term it has worked beautifully, but in the long term I don't think it's going to work quite well. So we're seeing that slow down now, and part of the issue is, China has not ever dealt with a real slowdown, any recession. So I don't think that they know how to handle it, and that's going to be part of the problem. Many of their big cities have seen explosive growth. I mean, these cities are huge, which many of them would actually dwarf New York City. So you've got 200 million people out there, kind of lower education people who've been out there building these cities, obviously working like they've never worked before. But soon, I think many or most of those people, as this recession continues to go on or continue to get worse for China, will be out of work. So just imagine if you had 100 million people all of a sudden not working, or 200 million people not working. I think the experiment that is China is going to show that it is not going to succeed. So keep your eye out for China. There's a lot more to talk about with China, but I'll just leave it at that just to keep this video relatively short. Number two is oil. Oil right now, of course, gas prices are beautiful. I think that these have been the lowest gas prices that we've seen coming into Labor Day weekend in a very, very long time, if not ever. As far as, no increase in gas prices. Actually, there were decreases in gas prices going into Labor Day. But anyways, the problem is, the U.S. oil market has also been doing very, very well. Over the last several years, we've been basically digging and creating or digging more oil and producing more oil than we have in a very, very long time. So just imagine if we've got 2 million barrels of oil more produced by the U.S. than what we've had in the past, and all of a sudden the not the Asian, but the Middle Eastern oil producing countries are deciding, you know what, we're not going to reduce our output of oil just because there's more oil in the market because of how well the U.S. is doing. No, their strategy is, and you're not seeing this in the news, but the truth is their strategy is they want oil prices to go down, not for the good of the people, but so that the U.S. can get out of the market. So if oil prices continue to go down, basically it becomes unprofitable for these American oil companies, because they do it a very expensive way. They do it in what is termed fracking, which is pretty expensive. So we as a U.S. Oil producing country actually need oil prices to be higher for us basically to stay in the game. So these Middle Eastern countries are producing just as much oil, and in some cases, depending upon which time of the year it is, they're producing more oil in order to bring the price of oil down. So they think that this is a good strategy because they get the American people out of the market. They've got all the market share for themselves. Well, we're not just going to abandon this game, but this is also going to cause continued problems for Russia. It's going to continue to cause problems for oil-producing countries in the South America, like Venezuela. So what they're actually doing is causing an economic crisis or adding to the economic crisis around the world. Again, a lot more we could talk about with oil and how this affects, but just believe me when I tell you, the Middle Eastern countries, this is their war against America. This is the only way that they can fight against us, but they don't know what they're doing to the entire globe. So anyways, I think that it is a very, very scary time to be in the stock market. For the last couple of years, actually, I've been getting my clients out of risk. I don't like risk. I don't like stocks. I think it's a casino right now, even though we're seeing, again, 350 points up in the Dow today or in the stock market today. Again, that's just short term. I think we're in for a longer term hurt. So if you're watching this video, if you value what I'm saying, I would just say reduce risk or eliminate risk. I'm not taking any risk with my clients. So we're finding safe places to position our money, also looking for some tax advantages, but as well as positioning ourselves so that when we come out of this, economic problem that we're in right now, hopefully it's short term, we're going to be in a position to grow. So, here's a little bit, a quick thought. What happened in 2008 with the stock market, the stock market was down almost 50%. If your portfolio went down 50%, and the following year, let's say 1 year later, 2009, this has not really happened, this is a hypothetical. If the market went up 50% the next year, most people would think that they've broken even. So example, $1,000 in the market, if the market goes down 50% 1 year, in the second year goes up by 50%, you were actually down 25%, my friend. Because if you had $1,000, it goes down 50%, now you have $500. If the next year it goes up 50% again, it's not going up 50% from the $1,000 you started with, but it goes up from the 50% where you are at that moment, $500. So 50% of 500, $250, you'd have $750 if that scenario actually happened. So what I'm trying to do is, if we've got $1,000, the market takes a dive of 50%, I still want you to have $1,000. And then when the market goes up the next year, 5%, 10%, 20%, whatever it is, I want us to be able to take advantage of that, not try to dig yourself out of a hole. So anyways, guys, those are my two top things that I think are affecting the market: China and oil. I think that they will affect the market long term. Protect yourself. I think you should get out of the stock market casino if you can. Stay away from bonds. Bonds are high risk as well. You've got to find a place for safety and a place where you can be positioned to continue to grow once the market gets a little bit better and healthier. I'll talk to you soon. Thanks for watching. Follow me on Facebook, Instagram, Twitter, YouTube, all things social at EdwinAdvisor, and I look forward to speaking with you soon.